Alright guys, happy Monday morning, and just like that, we are back into it. Hope everybody had a good weekend, and let's jump into some preparation work here. A little bit of a different story this morning than what we've been used to. Got some green coming in this morning, so S&P 500 set to open up about 1% higher, and we're also seeing some moves to the upside in tech as well. We got the Qs here up about 1.5% pre-market. And the financials, no change there. Quick look at energy. And a little bit of green in energy, but in all reality guys, the major focus here for the time being is going to be and should be on, the biggest piece of our market, which is the technology group. So remember, from week 1 and 2, we don't want to get caught up in what we see up here. The fact that a lot of technology stocks are going to move higher in price this morning, the fact that we're going to see green across the board, doesn't necessarily mean it's time for us to go trade. Doing the big picture prep this morning, first thing you always want to do is look for key levels on the charts. Like we've been discussing, obviously the biggest level that we've been paying attention to is the 200-day moving average. What happens between here and that 200 is going to be a whole lot of noise, a whole lot of volatility. The real important move is going to come when we get back to that 200. How are we going to react to that level? Are we going to trade up to this 200 and just rip higher over the next few weeks? Are we going to drift up to the 200, face resistance, and then turn back to the downside? Or are we just not even going to approach that 200 for a bit? So it's just super important to remind ourselves, guys, that we are below, some very key levels in a lot of these stocks that we're looking at. You take something like an Amazon, a Google, a Netflix, and we have all of the leading stocks in our market trading below that level. Now, gonna have a nice move here in Amazon today. Looks like we're gonna open up that 1670 range. And if that is true, that will put us right at the 200 or just above the 200 day. So something based upon what we're seeing right here, we want to put in our notes is, something as simple as Amazon at 200. So for those of you guys this morning who are filling out your big picture puzzle, that's something I would put for Amazon. So here's a good example of a note for Amazon. Set to open higher right at the 200-day moving average. Simple little note, but that little note allows us to now show up today prepared with the awareness that one of our major leading stocks in the market is set to open up at a very critical level. That note took 3 seconds, but now we're that much more prepared. We're that much more aware of the big picture. So it's going to be interesting to see how Amazon respects that 200-day. Things like a Google. Google's got a little bit of a ways to go, but going to be interesting to see what happens whenever Google should return to that level. Take a look over at Netflix. How is Netflix going to act at this level? Now, we have a little bit of a ways to go, but nonetheless, guys, these are things we want to pay attention to and have the awareness that, hey, these leading stocks, despite the fact that they're going to bounce higher this morning, are trading below some key levels. So before we go rushing in and putting, big capital to work, let's pay attention to these levels and see how things are shaking out. Now, should we see a return to normality this week? Should the volatility die down? And should we, begin to see kind of a little bit of a swing back to the upside? Apple still remains my favorite position. It's held up the nicest during this major sell-off and really hasn't taken the damage that any of the other stocks have. Compare a chart of Apple to, say, a Netflix. Netflix has a much sloppier, volatile chart. You can compare Apple to something like an Amazon. Amazon has lost significantly more value during this decline. And the same thing can be said for things like a Google, and as we all know, Nvidia. Google's lost a lot of value. Nvidia has gotten tossed around in a very violent way. all this damage across the board, and then here's Apple just in a beautiful squeeze at the moment. So Apple is actually in a squeeze on two of my favorite time frames, the daily chart as well as the 195-minute chart. So here's something I'll be looking at the next few days, guys, the 195-minute chart. And why I look at 195 minutes? 195 minutes is half of an entire day's price action. So those two bars right there represent last Friday. For a potential breakout of that daily squeeze on Apple, I'm going to utilize the 195 to try to see that money coming in a bit sooner than those who are looking at the daily chart will. That way I can get in here even earlier and follow the money. So one of today's videos, guys, is going to be breaking down the squeeze setup a bit more and how I go about personally trading the squeeze. For me, I like to identify the setup on the daily chart, but then I'll utilize either the 195 or the hourly chart to kind of be like a surgeon, cut in there, see what's going on beneath the surface, and follow the money a little bit sooner than the rest of the market can. So these are just a few things, guys, I wanted to talk about this morning. Yes, we're going to bounce across the board at the open. However, like we saw a few times last week, that usually doesn't mean shit. Doesn't mean you want to go rushing in and putting your money to work. So what can we do this morning as a team, as a trading family, to prepare for the morning and to help us avoid a potential, move against us? First thing you want to do, guys, is just this typical morning preparation. This little discussion this morning, nothing crazy. However, we're able to identify that, yes, we're set to open higher across the board. We also identified that, hey, we're below some major levels here. That's something to be mindful of. And we've also been able to kind of pick Apple out of the crowd as a setup that's been stronger than most. So that's one thing that we've been doing every morning, that you should do every morning, that's very helpful. Big picture. Go look at the overall market. Look at those sectors. Fill out that trading puzzle. If you do this every morning, guys, you're going to be fully prepared to trade. You're going to be very much in sync with the big picture. So that's the first thing we do every day. AM trading prep. Get a feel for the big picture, take our notes, put together our puzzle, sit back and see what we're working with. The second thing, like we already talked about a week back or so, is that big picture view. You never want to enter the day looking at just that one given chart. That is especially important in environments where things are making little bounces and then immediately getting met with some huge selling. So whatever your stock is, whatever stock you're looking to trade today, like we already talked about, take that bird's eye view. Do not just look at Amazon if you want to trade Amazon. Have a big picture bird's eye view of everything that you need to put on a trade with edge in Amazon. You want to see the SPY and the Qs because you want to see confirmation that the market is moving higher. You're going to want to see the whole technology group moving higher. You're going to want to see Apple, Nvidia, Netflix, Google, Baba, all the leading names also moving forward on strength and volume. Those are those confirmations. So those are two major tools, guys, that are really simple, don't take much effort, but can really help you improve your consistency and keep you out of the crappy moves. Putting together that big picture puzzle is one of them, and then using that trading checklist is the other one. So for those of you who may have missed that weren't able to download it, I'll attach both of those documents to this morning's email, but these are the things you want to begin to make a habit. Doing that AM trading prep, filling out that puzzle so way before the market opens, you can sit back and see that big picture. Then you go put together your game plan. And then we use the trading checklist every session before any trade to help us make sure that, hey, this trade we're putting on right here is not only supported by the entire overall market, it's also supported by its sector, and every other name in that group is ripping as well. Those are the kinds of trades we want to put on, and I can't stress these little daily disciplines enough during an environment like this. The reason, it's just plain and simple, the reason so many traders have lost a lot of money, have put huge dents in their account over the past few weeks, it really comes down to just not being in sync with the big picture. When we take a step back here, guys, look at all that selling volume. Why have you been trying to go long technology? Anyone trying to go long Amazon? Why? Take a step back. What's the big picture screaming? Billions of dollars leaving. A lot of traders in the group really love the follow the money strategy when they're going long. But it seems like as soon as the market turns the other direction, traders tend to panic and they start to completely go against, the follow the money method or thought process. But here's the thing. Just like you would follow this money right here into Amazon on the upside, you'd want to follow that big money there to the downside. The game doesn't change. Just because the direction that the stocks on the screen may be moving changes, our job in the game that we play does not change. As small independent traders, like we've talked about hundreds of times, we need to follow the money. Who cares if it's going higher or lower? Who cares if the money is entering or leaving the stock? Don't have a personal attachment to these pictures on the screen. Nvidia means absolutely nothing to me. This is just a bunch of bullshit colors and lines on a chart. What means the most to me, guys, is this. Put aside your opinion, put aside your thoughts on a company or trying to predict a bounce. Every single day for the past few weeks, Nvidia has been screaming, short me. Big money leaving, big money leaving, big money leaving. Just on last Thursday and Friday, we saw 1.8, 1.4, and $1.5 billion getting dumped out of Nvidia. You're foolish, guys, to think that with your $500 or your $1,000 or your $2,000 account that you're going to be able to buy, you're going to be able to jump in front of all that selling and catch a profitable trade in Nvidia. It's just foolish. So the major reason people are taking damage lately isn't because they're not good traders. It isn't because, they're going through a trading funk. It's because they stopped playing the game that works. A lot of people make money when Nvidia is going higher, but they lose it and they give it all back when Nvidia is going lower. From where I sit, guys, from my perch, the game doesn't change. We're just following the money, and we should have no bias and no concern and really no care over which way it's going. Just follow that. So that's what we can do today and Tuesday, Wednesday, Thursday, Friday moving forward. AM trading prep. Take the few minutes it takes in the morning to get in touch with the big picture. Take those puzzle piece notes, and then you're more prepared. And then during the session, guys, strictly adhere to that trading checklist. If you don't have your confirmations, forget the trade. Just move on. Too many of you are putting on trades that, in all reality, aren't going to make you much money even if they were to work. You gotta have edge and you gotta have direction at your back. So those little daily disciplines are going to allow us to avoid giving up so much of our forward progress, our hard-earned profits, when the market turns to the downside. As independent traders, our job is to follow the money. And with that being said, guys, our game should be the same every single day. Stay prepared, take your notes, have a game plan, and then just follow the money. There's no reason to panic or get all freaked out when stocks are falling. If anything, it gives us an opportunity to make money while most are making pain. So those are the things, guys, we can do every day to stay more prepared and avoid a lot of the drama and nastiness that most traders are finding themselves in lately.